Hello, I'm Bernard Hickey from interest.co.nz and welcome to an interest rate special. Now everyone's hoping, if you're a borrower that is, that the Reserve Bank will cut interest rates on Thursday. The economists in the market say it's about 50-50 whether or not the Reserve Bank will cut interest rates. So the question arises, what will happen to mortgage rates if the Reserve Bank cuts the official cash rate from 8.25% to 8% as some are expecting? In the past, we might have expected mortgage rates to be cut because of that, at least over the following 2 or 3 weeks. But if you have a look at how New Zealand banks are funded right now and what's happening on international markets, that assumption may not be true. That's because the funding costs that many of New Zealand's banks are facing on international markets have risen in recent weeks. That's because of the credit crunch. Now, some people thought the credit crunch was over back in March, when the Fed bailed out Bear Stearns, but it's back with a vengeance now. In particular, problems with Fannie and Freddie have increased volatility on international markets and increased interest rates. And we saw that last week with ANZ National. ANZ National went out into what's called the term debt markets in the United States to raise $2 billion US. Unfortunately, they had to pay 240 basis points above New Zealand interest rates to raise that money. Previously, they'd normally pay 60 or 70 basis points above. What does that mean? That means that ANZ National has borrowed $2 billion US from foreign investors at effectively around about 9.7%. Yet, it has a mortgage rate out there in the market right now of 9.1%. So effectively, that's for the 5 years. So effectively, it is losing money on that right now. And ANZ National CEO has told us here at interest.co.nz that all of the increased funding costs from the last few weeks have not been passed on to New Zealand borrowers. So when the Reserve Bank probably cuts interest rates on Thursday, that is unlikely to be passed on to New Zealand borrowers in the form of lower interest rates, simply because the global financial markets are in such a tiz right now over the subprime credit crunch. I'm Bernard Hickey. That was an interest rate special for interest.co.nz.